Why am I already opening a second position in my ThetaGang challenge? We'll dive into that in this video. By the way, welcome back to Investing with Mackie. While theta strategies rely on time in order to gain value, I love obsessively checking my account and positions. As a result, I saw a decent opportunity here to add another credit spread, but this time on the put side. When I first entered the first trade, the call spread, the price was moving around $16.50 range. I decided to enter by selling a $17.50 call only $1 above the current price. This gave me the 9-cent credit or $9 for the position. Robinhood likes to show the worst case scenario, so the cost to close the position immediately showed $11, meaning my account was down $2 right away. As I was checking the position the next day, I saw the price of Palantir had dropped nearly 20 cents. This adjusted my call spread closing price back to $9. This also meant I could open a put credit spread with the better credit than the previous day using similar strikes. I opted for the $15 put strike and placed the limit order for a minimum credit of $7. This order filled a few minutes after placing it. Here we can see the price of Palantir when I opened both positions and historical prices back to the middle of December. The two red lines are where I need the price to stay between in order to get my max profit. Worst case scenario is that the price ends up on the wrong side of a red line. However, because the price is a single value, it can only be on the wrong side of one red line. This means I do not need collateral for both of my credit spreads. This is known as an Iron Condor if you want to Google it to learn more. To note, the con of this position is that as a whole, it's fairly delta neutral. What that means that is if the price of Palantir goes down, the cost of my call credit will go down, so I can buy it back for less. But because the price gets closer to the put options, the cost to buy back and close the put spread will increase. Essentially, it makes it harder to take advantage of a price swing because any movement doesn't really help your position. In terms of time decay though, 2 credit spreads are better than 1. Let's quickly review where we stand with the call spread. The strike I chose was only $1 from the actual price. This made the delta a bit high compared to where I typically trade. It started off above 0.3 and is now just under 0.3, which is more comfortable. This chart shows that the delta for both strike positions, and we can see that every day that passes, it will continue to drive those deltas lower. This is the thetas for the 2 strikes. Looking at this, we can look at the theta decay across the combined position. Right now, the strike we sold is losing 1.7 cents per day, making the option cheaper to buy back. However, the strike we bought is losing 1.4 cents per day. When we subtract the two, we get a difference of 0.3 cents per day, or 30 cents per position. This is the passive income that theta strategies give us. Really quick, we can see how that theta will change as expiration approaches. Here we can see it will increase to 40 cents per day. Finally, right up to expiration, we should expect to stay around 40 cents. This means that with our collateral of $50, we are earning, say, 35 cents a day on average, or 0.35 divided by 50 gives us a daily gain of 7%, or almost 5% in a 7-day week. Now, looking at our new position, the put spread, we can see the $15 strike has a delta right around 0.2, and the dark blue is headed towards that 0 delta with each day. Moving on to theta, we can see the split is currently around 0.2 cents, or 20 cents per day, and the space between the 2 lines grows a decent amount as expiration approaches. Midway between now and expiration, we will hit 0.3 cents. And finally, days out from expiration, we will be at 0.6 cents or 60 cents per day. Using the initial theta numbers for both the put and call spreads of 0.2 and 0.3, we get a total of 0.5 cents or a gain of 50 cents per day. This is 1% per day on our initial $50. My goal is 10% per month, so if these positions both go my way, we will reach our goal in only 10 days. If you're not yet a believer in theta strategies, continue to stick around and subscribe so you don't miss any updates. Make sure to drop any questions in the comments below. Happy trading.